Hey everyone, welcome in to another daily editorial here on the KE Report. Happy to report I am chatting with Jordan Roy-Byrne again, founder and editor of the Daily Gold. Now, Jordan, just as a broad comment here, I've been in this sector for, I'd say, over 15 years, fairly actively. Longer if you consider that, I was younger, but also watching this sector and had some involvement in it personally, outside of obviously gold and silver prices doing well, gold prices especially doing well, but silver having this recent breakout. To me, this is probably the strongest market I've seen in at least 15 years, even trickling down to the stocks. I'm curious, you've been around for a while in this sector, probably around the same amount of time, maybe even longer. What's your assessment of this general market strength compared to the last about decade and a half?
Yeah, Corey. Well, if we think about the last decade and a half, most of that was during a secular bear market. 2011 to 2023 was a secular bear market. If we're looking at gold, I mean, we could make the case the secular bear ended with the low in 22, but the low in 23, I think, is when it ended. If we're looking at the gold stocks and silver, you could actually make the case it didn't end until the beginning of this year. So we were in a secular bear market. And yes, during that time, I mean, there were a few good moves like we had in 2016 after the COVID crash, but those, as we know, were not sustained. So this is the first time we've had where we've been in a real cyclical bull market since that end of 2008 to 2011 period. And even though it has not been confirmed yet, we are in a secular bull with that clear cup and handle breakout in gold above 2100. I would say it reminds me most of, I'd say, 2005 and that breakout, but there's no perfect comparison. I mean, we'll obviously know more in a year or two, but I think we're going to be tracking more with the moves of the 70s than the 2000s, because in the 70s you broke out to a new all-time high in gold. I mean, it was artificial for many decades, but you broke out to a new all-time high. The same thing happened in silver. And so in that situation, we are going to see really explosive moves, also big drawdowns at times. So we're not only in a new cyclical bull market, a legit one for the first time since '08 to 11, but I mean, this is a new secular bull market, and it's pretty exciting. And this is going to get even more exciting, once we confirm this with, gold breaking out against the 60/40 portfolio. That's when this thing will get really exciting. And, we will have more accelerated moves, but also, as I said, we'll have some big drawdowns at that time as well.
Oh yeah, hey, that happens in bull markets and bear markets. Some of the counter moves are also large. Just even on the stock front too. One thing that I find so encouraging about this recent rally, which is about 8 to 9 months long right now, is it's been a very logical process with the majors moving, the high quality mid tiers moving early on, royalty companies have been moving, and now it seems like that money is starting to filter down into some of the juniors. I've noticed some juniors recently that, yes, their share prices are still depressed when you look at a long term chart, but their stocks have started to move on some better volume without really any news with some of these stocks. And you go back over the last 15 years, yes, we've had some bounces, 2016 COVID bounces. Those were kind of 6 months long, and it really took the juniors and everybody all at once. And we all know how quickly those turned over. So, from the stock standpoint, too, what are you seeing in terms of potentially the stability of this bull market?
Yeah, that's a good point and a really good question. At least kind of in a short-term sense, what I've seen is the larger stocks, as you mentioned, and even the larger juniors, ones that have like a market cap around a billion or above a billion, I mean, those seem to move first. Now, I think in the last week or so, we've started to see exploration juniors and silver stocks really outperform. So yeah, typically you get the majors moving first, then you kind of get the larger junior or mid-tier producers. They tend to move, and then after that you get money going into junior explorers and then silver stocks. That's kind of the last wave when you have a market move. So I don't know. I'm just putting it out there. Maybe we have a couple more months or another month of a move higher, and then we get some kind of interim peak for, I don't know, 3 or 4 months, potentially, depending on how overbought we get. But so at the end of that move, we should continue to see junior exploration companies and silver stocks moving. It's also a function of value. I mean, I'm looking at, like I always say, quality and value. So in recent months, I was more about focused on quality because, there were everything was at a like kind of at a pretty good value. So in that case, you go for the quality. But now because of those larger juniors and junior producers, because they've moved so much, they're still high quality, but the value is not as good. Then you go further down the food chain, try and find something that still has a good project, or they're really undervalued, they're a really good value at the current metals price. Then those are the ones that buying will start to come into once you get later in the move. So I think kind of in a shorter term sense, that's where we are. But, bird's eye view, big picture view, we're in a really good situation for the entire sector. And eventually, once the stock market fizzles out or really slows down, I mean, you can see potentially even bigger moves. I think we'll see that happen at some point in the next 12 months, whether it's a recession or we move into stagflation. Because I'm looking at various charts. I'm looking at gold against the 60/40. It's getting really close to confirming the move in gold. I saw yesterday gold broke out against the equal weighted S&P 500. So that hasn't happened in a while. I saw gold again had another breakout against the world X the US. So obviously, I think the next step will be gold breaking out against the 60/40 and then breaking out against the stock market. Obviously, bonds, that's another problem where the Fed started to cut. We're seeing long-term yields move up. Other people much smarter than me have mentioned that like that's when you could have a real problem when the Fed cuts, but long-term rates go up. So that's an issue. So yeah, things are looking good. I'm tracking the breadth indicators and overbought indicators, and yeah, they're getting pretty overbought at this point, but they're not at an extreme yet.
Yeah, that's fine. Overbought is good. That signifies a bull market. That is one of the defining features of a bull market, if you ask me. One thing we should note, too, is that, look, gold and the gold stocks did move up quite nicely from 2018 to 2020. Even before the COVID drop, there was an uptrend there, but it just doesn't seem like the same sort of market that we are experiencing right now. Who knows? Maybe it is similar, but this one just seems a bit more stable to me. Let's talk about silver then, because silver has had, I think, a pretty important move this week alone. It's broken above kind of that $32 to $33 range that it was stuck in, now in the mid $33, and that's even after a over dollar pullback today. Question being, from a technical standpoint, what signifies a breakaway gap? We all know that gaps get filled most of the time, but breakaway gaps, how do you view them? Do we potentially have breakaway gaps in the charts for silver, even the silver stocks?
Yeah, a breakaway gap. It also can be called a runaway gap, and it usually happens at closer to the beginning of a move, and the market gaps up, and then it never fills that gap. It just stays above that gap, and it moves higher significantly from that point. So that's a breakaway or a runaway gap. Whereas if you get a gap later in a move, that tends to be an exhaustion gap where you kind of gap up, you move higher, but then all the selling comes in, and that's the end of the move. With respect to silver, last week it broke out from a continuation inverse head and shoulders. It's not a perfect inverse head and shoulders, but close enough in my opinion. So that breakout projects to 38. I've been talking about 34, 35 for a really long time. So this is a legit breakout measuring to 38. So silver gapped up on Monday, and it filled a little bit of the gap before it went higher. But at this point, we're talking today, it's down over 1%, down about 3.5% into the high 33s. I think that gap will fill. That's not necessarily a bad thing. I'd rather see it fill now than, in a couple months. But silver in the last couple of days, it peaked out at 35, and 35, Corey, is the monthly resistance level. So that's a very strong target. And you look at the calendar, October 23rd. So we have another, I don't know, what is it, 5 or 6 days left in the month. So that resistance at 35 in silver, that's something that the market will be, potentially testing over the remaining days in October. But that's how I see it. You do have a target of 38, but that monthly resistance at 35, that could be an issue for the rest of this month. But, if it can't move above 35 or close above 35, I mean, that's not a bad thing at all. It 30 just has really strong support at 32, 32.50. And I would rather see that happen than this thing run away, because if this thing were to run away to 38 in a week or two, it's too overbought. It's going to come back down and fill that gap anyway and test 32. So maybe we're getting in silver, getting a little ahead of ourselves. So I'm not at all phased by this pullback, and it might be a good thing in the long run. Same thing with the stocks. I haven't been able to look at too many of the stock charts, but I would rather see the gap fill than not. So I mean, there was a chance it could be a breakaway gap, but at this point, it's not a breakaway gap.
Hey, fair enough. The last time silver was in 35 region was back in 2012. So that's a long time. This is encouraging to see silver up at that level. Jordan, one other comment I want to get from you is that as much as you compare the moves in gold to that 60/40 portfolio and all kinds of other market factors, let's look at what gold has done compared to the US dollar this month. Gold is up almost 4% this month. Silver is up something like 10 or 11%. And the US dollar just this month is up almost 5%, I believe. So this is a strong move in the face of a stronger dollar. I know the dollar was selling off fairly dramatically a couple of months prior to this, but look, the move in the dollar and gold and silver together, what do you take away from that?
That's what you want to see in a real bull market, is you see gold going up against everything, really. But the two things I always follow are gold against the stock market, gold against foreign currencies. So I just pulled up a chart of gold against foreign currencies, and that thing has been really strong in the last month or two. And so you just love to see that when the dollar's going up, or at least it's not falling, and gold is rising significantly like it has been in recent weeks. So I mean, that's the type of relative strength that you see in a real gold bull market. And I love to see that, because the dollar doesn't, honestly, it doesn't factor into a lot of the work I do. Gold leads the dollar at key turning points. And again, this is evidence of a real bull market in gold, where it's rising in all currencies. And, the dollar going up, that's not holding gold back. So that's a really good thing. And gold against foreign currencies, that tends to lead the gold price in the US dollars over the last 30 or 40 years, based on my work. It makes higher highs before the dollar, or before gold in dollars. It typically makes a bottom and turns up before gold does in dollars. So it's a really good sign. And again, once we see gold break out against the 60/40 and break out against the stock market, you're going to be in a full blown real bull market at that point.
Oh, it feels like a bull market right now, too, even when you consider just how much the yields have bounced this month, too. Nothing seems to be getting in the way of the precious metals. It's, I think, very much a momentum trade now, finally, which is very encouraging, I think, for all the gold bugs and really just all the investors in the space. Jordan, what are you doing within your portfolio then? Are you changing positions from some of the stocks that you have? Are you trimming some of the winners and rotating money into some of the lagging stocks? Are you riding your winners? There's a lot of positive moves and I think a lot of winners for investors right now, especially if you're buying it all this year. What are you doing with your portfolio?
Just holding and nothing. I'm not a man of few words, but that's all I can say. Just holding at this point. But you did mention trimming some winners and moving cash around. I may do that at some point here in the short term if we get some more softening in the sector. I mean, I am looking at some other potential buys, but yeah, for the most part, it's just been holding and not doing anything. I mean, we did add to some silver positions a couple weeks ago, but I have a little bit of cash left, but that's basically where we are. And it goes for me and everyone. You are going to make the most money when you're doing nothing. So I try not to overtrade. But yeah, if you don't have any cash left, or you have too little and you see something that's a really good value, there's nothing wrong with trimming a little bit of a big winner and rotating that capital around. I think that during a bull market in gold and silver and junior mining, that's really the type of strategy that you need to have. Sell the big winners, or I should say, trim the big winners, sell big parts of them when they get really overbought and the sector gets really stretched. And you can move that money into other stocks that They're good companies, but they're even better values. They haven't moved that much. You can lower your risk that way and still participate in a bull market fully.
Yeah, the key being it's a bull market, right? Buying and holding during a bear market, well, that doesn't make you any money, but truly riding that bull wave, playing that momentum, yeah, that's how you make money. I guess stay invested in the sector when it is a bull market and just take note of any maybe disconnects that you're seeing. But hey, I'm with you. Be invested, I guess, and ride the winners, ride all the stocks because most everything right now, or at least a lot of stocks, are moving higher. Jordan, thank you as always for your time. Again, Jordan Roy-Byrne, founder and editor of the Daily Gold. Click the link in the show notes to visit his website. Jordan, pleasure chatting with you. We'll chat again soon.